In this video, guys, we're going to look at taking profits like a pro. Stay tuned. Hey guys, warm welcome to you. Thank you for joining me. All right, so by the way, appreciate your subscriptions, appreciate your likes, your shares, your comments, etc. It's good to know that you guys are getting some value from these videos. You know, definitely don't pretend to know everything. I do have some experience that I try to share with you, and if you can take away one or two little things and it helps you out, then that's exactly what it's designed to do. So taking profits like a pro. Let's explore some of the ways that kind of consistent and profitable traders tend to take profits. And I'm not just doing it from my perspective either, guys. I'm looking at it from perspective when I see lots of traders. The ones who are kind of doing well tend to do one of these two things, or kind of hybrid mixture of the lot. Rather than being very strict about one, they tend to say, okay, what are conditions? What's the environment? How can I adapt and adjust and tweak? And that's really the key to all trading, guys. It's being very dynamic and adaptable depending on the conditions, how you place your stop, how you take your entry, how you take your profits, not being so fixed, not trying to become a human algo. It's using that little bit of intuition, using that human element to your advantage. All right, so the first thing is specific price target. Pretty simple, guys. We go, right, I think it's going to go from 100 to 120. I'm going to put a limit order in at 120, goes to 120, you take your profits. That's obvious. Now, when would you do that? You'd do that maybe if there was a kind of congestion. So imagine we had a little mini chart here. Imagine there was a big, thick level where price had kind of stopped multiple times. You're buying down here. You want to come out there. Now, you want to come out there because you don't think for whatever reason it's going to break out. Maybe it's not the right environment to break out, and you just think it's a big leg for it to jump over. I'm going to take out my position there. Or even better, I'm going to take half of it out here and I'm going to leave half and see if I can get a little bit of a cushion and a little bit of a break and then trade into the break. So obvious one there, specific price target. Another one is price pattern. So taking profits on a price pattern is basically using the pattern that you would get into the trade in reverse to get out of the trade. What's a good example of this? A good example of this is, let's say you've got in on a double bottom. Keep it super simple. If you start to double top, you're going to use that to get out. Where double tops, you don't know, but if it double tops, you're going to do that. If you get in on a pin bar to the downside, maybe use a pin bar to get out to the upside. So you're using the patterns that you want to get into the trade in reverse to help you get out of the trade. Nice way of using price action to your advantage, both ends of the trade. Now 3, trade and let the market show you. So pretty common one this, guys, and super useful when you don't know where the market's going to go. So again, I like to use this with a scaling strategy. Leave a little bit on to trail, trim it, trail it, see where it goes. Trailing it is something like putting a moving average and following up, or using a 2-day close if you're a swing trader, or 2-bar close if you're kind of a day trader, or some kind of indicator that's going to oversold if you're using stochastic or an RSI, but just something that says, hey, if this market's going to keep going, I'm going to stay in it. If I'm long and it's going to go up and up and up and up and up and up 15 bars in a row, then great. The one time it comes back and takes up the prior low, I'll come out, or 2-day low, or touch that moving average, I'll come out. So very simple method, but the advantage of this is you say, I don't know where it's going. It's a momentum type trade. This thing is starting to rip out. You know, I just want to be on it. I want to see where it goes. I want to kind of ride that momentum. I got no price target for it, so I'm going to just trail and trail and trail and trail. So that's one way of doing it. The fourth thing is scale into momentum fade. So this is really when momentum starts to fade. And this is something if you're kind of working with a price action methodology and you're good at reading momentum changes and tape changes and all those things that we kind of look to spot. When that starts to fade, however you're looking at that, however you're judging that, then you sell into that, then you come out into that. So you're watching for how it responds, and you know, quickly, we know price action, guys, it's how it responds to key levels, how it responds to changes in momentum, how it responds to opens, closes, prior highs, what's the ignition strength like, what's the duration of the trend, what's the direction of the trend, all these kind of things that we put together in a kind of a big mold and go, oh, is that strong or is it weak? So, you know, scaling into those momentum fades is a good thing. Now, the disadvantage of that is sometimes you have to be at the screen all the time. You can use a hybrid model and go, let me have an alert level, then look at the momentum fades, but there is what it is. Final thing, guys, is close into extreme and unusual moves. Not as common as others, but has been recently, especially if you've been trading some of the kind of blowout moves on some of the tech stocks. This is basically when you go, and also to be fair, currencies like cables swinging quite a lot for headline news. You basically are in a position and you get a bonus drive, like just an unusual move. You're in a stock, all of a sudden there's a 12% up day, You use that as your advantage. You say, okay, this is unusual. This feels like it's an exhaustion type move. Let me scale into that. If you're day trading euro, for example, headline news comes out and it spikes at one direction and it happens to be in your direction and it's above a high and it feels like it's just the last flurry on a trend, use it to your advantage, scale out into it. Say, hey, you know what? I've made a lot of profit in a very short period of time. I'm going to scale into that. I'm going to fade the kind of extreme move, the unusual move, or the hype as well. If you're trading stocks, a lot of people get hyped into a stock, it ramping up and up and up. Scale out into that. Don't get caught up into the hype. The best, though, by the way, guys, is, in my opinion, and let me know your thoughts in the comment section below, as always, is to use a hybrid model or a mixture of all of these, depending on the conditions you're trading, the market you're trading. If you're in a range bound environment, specific price targets, fine. You're just playing a range, you're kind of buying at lows, just selling at highs or the midpoint, or however you're trading it. Very simple, very methodical. Price pattern good when there's a lot of, you've got a good read on the price action. Again, downside is, you're kind of looking for something that it might not give you that pattern and reverse, just like the market might go high, but not giving you a signal to get in. So there's downsides to that, but sometimes you can say, well, if I do see that, I'm going to cut it. Try and let the market show you. Of course, if it's a good trading environment, that's a super powerful one, because you've seen stuff that's just gone on and on and on. You don't know where it's going to go, and it just goes into the stratosphere or just through the floor. And you're like, okay, market, you go where you want to go. I'm with you for as long as you kind of run a ride with me. And your decision then is how wide you have the trailer. Scaling momentum fades, one of my favorites, because markets are always moving in kind of pulses, big wave of momentum, stagnation, big wave of momentum, stagnation. Downside of that is when the momentum fades, doesn't mean it can't accelerate again. You're just coming out into a fade. You're kind of thinking it's a precursor for a reversal. That can wrong foot you a bit, but at least you're riding that momentum for as long as you can. The final one, of course, is closing into extreme unusual moves. I like that because it happens rarely. Sometimes you're in a trade, just goes boof, straight up and it's looking fantastic. You're in that long, you can scale out of it. Fantastic. You take your profits, you look for the next trade, you say thank you, I was on the right side of luck this time. And by the way, you don't have to always take it all out. You can kind of tighten that stock right up in case it just goes on another day and use it with the trailer. But very often, if you've got a good feel for these stretches, the spring, and it really stretches, it's a good time to take some profits. All right, guys, taking profits like a pro. Appreciate your feedback. Bye-bye.